Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, July 8th. It is 6:20 in the morning as I start the video. Got a lot of red on the screen this morning. Let's take a look at it. Copper's down 2%. Nat gas down 0.8. Oil down 1%. ES and small caps, ES and NQ are down about 1.5%. Small caps are down 1.7%. Gold is up about 0.5%. And our 10-year yields are down below 1.3%, trading at about 1.27, 1.26% as I start the video. Over on the macro front, really not a lot going on today. We've got jobless claims, and then we've got oil and nat gas inventories at 10:30. But the real thing that's going on today is we've got an OPEC fail. They couldn't come to an agreement, so oil is trading down on that. Why? I guess the market believes there's the potential for a free-for-all where all the member states just start pumping, doing whatever they want to do. And with the relatively high prices, they would want to bump up their production and potentially flood the market. I don't know if that's going to happen. As it always goes, you just got to follow the chart. That's the most telling thing. Also, over in China, they are signaling that they're going to start easing. Their economy seems to be out of sync with everybody else's that are either talking about tapering or actually are tapering, around the world I'm speaking, not just the FOMC. So they're talking about lowering their rates to boost internal growth. And then we've got the yields, which is flashing a growth scare here in the States. So let's take a look at it. I want to run through this fairly quickly to give you guys a flavor of where we're at and the levels we need to be watching today and tomorrow. So here's the 10-year yields we've been tracking. Yesterday we had a sizable drop of down to 1.32% here on the 10-year, and now we're down in this 1.27 area, 1.26. And as I was discussing yesterday, not a lot stopping it here. I mean, this was a rapid rise, straight up. And with, here's your first real level, about 1.12, 1.11 down here. That's going to be your first real level of support. So we could fall quite a bit further. And if we jump over to the TLT chart, that's of course the chart that tracks the 20-year bond. We had this big breakout here the other day that we flagged, breaking out above the 200 EMA and breaking above the downtrend resistance line. So now this has been a real nice trade to be long TLT, as we discussed. And so now we're trading right up at 150 in the pre-market. So I've added two additional layers of potential resistance. One here at 152.50, right here at this peak. And then the next layer above that is 155. And you'll see here, that was really a level of the initial breakdown. You can see all these tests right here along this line of 155. And if we were to get to that level, that would be a very objective level to take off any TLT long that you had, because this looks like a very big level of resistance. And I have no idea where that would correspond to on the actual yield, but probably down towards 1.1 or 1.0% on the 10-year. So still a ways to go, I think, on the upside. especially considering that yield chart where there's not a lot of support below yield right now. Yesterday we talked about oil being highly correlated to SPY, and we showed the USO chart, which is the ETF that tracks oil futures. We were talking about this 49 level, 49.25 to be exact, and we broke that yesterday, and now we're down another 1%. So if you're trading oil, I've added layers of support down below that you can track and use as gauges on your trades if you are trading it. We've got a level here at 47.70, which is a big line of support. We've got this large volume over price bar there. But after that, after 47.70 on USO, you can see it starts to drop off. You've got a big void here starting at 46.71. So no telling where the downside might take us. You just got to go level by level on USO, oil, really actually any of the charts that you're trading. I think here, as we start seeing some red after an extended period of upswing, you just got to go level by level and make your decisions accordingly. And as we've been discussing, and you should make a note of this, days like today are exclamation points on roll and protect. What is roll and protect? You get lucky enough or good enough to have options that find themselves deep in the money with big embedded gains. You roll that up, you take all that money to the bank, you get your risk back in line, because when the overnight rug pull comes, wouldn't you rather be at the money with all your positions or deep in the money where a pullback would really, really hurt, financially speaking? So that's why if you're an active trader and you get embedded positions, you've got to roll that up. You've got to take that money to the bank. You've got to maintain that more or less neutral stance so that when these unexpected drawdowns occur, most of your money is already in the bank. So let's look at SPY real quick. What I've done is I've looked at the futures and try to approximate kind of where we're at, so we can, a lot can happen. We're 3 hours from the open, so we could bounce or we could go down farther. But on SPY 2 hour, we're down around the midpoint of the channel. I think that is going to be a great reference level for you today. If we drop below the midpoint, that opens up a downside target to a run to the bottom of the channel. And don't forget, we'll have a big gap above that'll eventually need to get filled. So, we'll come down here. We're open around 427, something like that. And then we see if we can get a bounce to either fill the gap or plumb lower and come down here and attack this gap down here in the bottom of the channel. But remember our premises of technical analysis. We broke above the channel. The other day we came down for a tag of it and a look below that failed, and then we got the bounce. So on this breakout, when we open back below the top of the channel, that makes all this look fake. And all these people up here that are long, which, might be us, will want to unwind their long position. And then what happens is, that drives more selling. So whenever you're whenever you are outside of the range and you drop inside, the target becomes the bottom of the range. So from a technical standpoint, the target is down here at 423 at the bottom of the range. Now we may bounce here and never go there, but that would be, from a technical point of view, my expectation is a run down here, maybe by tomorrow, maybe today, whenever. Fill this gap, come down here to 423, and then test the bottom of the gap, or the bottom of the range, just like we did right here about, I don't know what that was, 2 or 3 weeks ago. So here it is on the 30-minute chart. I think we're going to come down. Here's that gap below right here at 429. Maybe fill that, and then here's the 423, that equivalent level on the 2-hour chart. So you may want to make a little note of that on if you're an active trader, looking at the 30-minute. This 423 corresponds to the bottom of the channel on the 2-hour chart, and you can see that there's a lot of we've got a number of gaps that have yet to be repaired. And whenever you have that situation, it's unfinished business. So it would make technical sense to come down here to 423, repair all these gaps, fill them, and then reverse. QQQ 2-hour, we've well documented that we've been on the lower half of this channel. We had looked below and recaptured it, but now we're going to gap lower. From what I can tell in the pre-market, we're down around 356 at the top of this gap. I would use that as a pivot point, or wherever we open, that'll be a pivot point. It may be down here at 354, where you see we've got a really big volume over price bar. That would be a logical place to get some type of a bounce or a hesitation, because that's really the largest on the screen as far as volume over price support. So that might be a nice place, or a place where price finds some stability, and then you can pivot off of higher for a bounce, or lower to come down here into this 350 to 348 range. And here's the exploded view. Here's that 356 level where there's a gap, and then we've got gaps down here yet to repair. So as we talked about, this 355, 356 area corresponds to that large volume over price bar on the 2-hour. I wouldn't be surprised if you got a little hesitation here and a bounce after this gap fills. IWM has been struggling. Why? The falling rates, as we've discussed, whack the cyclicals, whack financials, whack industrials, whack the reopening trades. So we've seen this in IWM. What I've done here is, in the pre-market, looks like we're down around 220. So there's a little gap here down to 219. And then I think there's the potential to come down here and back test this prior low down at 212.50. And you can see the intermediate little levels of support here. And just like all the other charts, it's going to open with a gap down. So there's always the potential of a flash run up to the top. And if you see that, if you get that flash gap fill higher, that's a good place to layer in shorts. And I would really caution you this morning of getting short into the hole, what you want to do is layer in those shorts once you get either stabilization at a level of support or after a bounce. If you just try to short a big red bar on the open, there's a good chance you're going to get whipsawed and taken the other way. So be real careful about that. Shorting into the hole after a big flush move, that leaves you kind of hanging out to dry out in space. So if you think we're going lower or the chart indicates that, you've got to do it at an objective level, at a level on the chart or after a Fibonacci bounce, something like that. So I would offer that advice. Speaking of Fibonacci bounces, here's a nice example of that. Yesterday we talked about we dropped in the Fibonacci retracements. Here was the move. Here was the move on, let's see, that was Tuesday, right? So we got a fib bounce in the morning up to this 326.20 level. That was the 38% retracement. So that's your dead cat bounce. And then it rolled right over. So you got to move from 226 down to 222. So that's how that works. And then you got you got the gap fill down to 222. Logical place to cover. We actually had a reach below down towards this low. And so you cover your short. You either recycle long or you wait for the next fib bounce, came right up into resistance and rolled over yet again. So that's how you can play those Fibonacci bounces to get good objective levels. And then you'll be on the right side of the trade when that rolls over. And if you're wrong, you've set a tight stop and you take your paper cut and you look to reload at a different level. But when you got these Fibonacci levels, especially when they come into well-defined resistance areas, that's a very high probability trade when you're in a downswing. So this morning, I'm going to look for this gap to fill down at 219, and then you'll probably get a bounce right there. Keep this prior low in mind down towards 212. Let's get into the fangs because these have really been working. Facebook, $8 trading range. We broke out. Now we have another $8 trading range up here. That's going to break down this morning, I would imagine. If we start getting closes below 348, it's going to work the same way in reverse. A break of this $8 trading range below 348, the target becomes 340. So you can use that 348 as a pivot on Facebook. So this has the potential to come down here. There'll be some support at 344, halfway point, and then come down to 340. And what would really mess up the whole program would be a move back below this 337, 338 level of the original breakout. Why? Because then all this would be fake. A false breakout back into the original range, that would be really bad news. So watch that. Apple closed at an all-time high. We have this uptrend channel. Pre-market, we're down in this 142 area. The technical target would be 140, and that would be a place where I would be interested in a fresh long. Remember the rules of a breakout above a channel. You go back into the channel. Your target is the bottom of the channel with support at the midpoint line, and that's where it looks like it is here this morning at 142. So those are your levels, 142 and 140 on the downside. And if we go below, and get that bounce, that's your objective level here at 140 to try a long. If we drop below 140, then our next level of support is 138. Tesla, bad. Looks like it, well, bad's all a matter of perspective. We broke out. We consolidated. We could not take out 690. We dropped below to fill this gap. We dropped down again to 640. And now this morning we're back at 625. That was the original breakout. Let's put it clear and simple. 625 has to hold. 625 has to hold, or we're back in this big consolidation base. And as we've just discussed, that is not a good place to be. And I would be really concerned about that. And if you were long, you got to close your trade if we drop in below 625. And if we're not able to hold that level, you got to accept the loss, because it could get much worse after that if we go into a down cycle. Microsoft Daily, we've been talking about top of the range. We talked about good place to book some profits. And so now we are going to open down. We've got the midpoint of the daily channel here at about 270. That would be a good place to look for some support back at the 20-day. Here we've been riding the 8-day, top of the channel, pull back to the 20 right here at the midpoint line. That would be a good place to look for support on Microsoft. Amazon, trading at all-time highs. I put on the fib retracements. I would just watch this today. Coming back, the 38% fib is at 36.10. The 50% is at 35.73. And then we've got a very important level here at 35.50, and that goes back on the daily chart. Let's show that real quick here. 35.50. This was our big impulsive breakout. If it comes back here to 35.50, that's your second bite at the apple. We've got this $600 wide consolidation that should be all support now. You should not see Amazon close below 35.50. And if it does, that's a very troubling technical development. So watch that 35.50 for to hold as support if we make it back that far. Netflix, we've been in this $35 gap. Everything's looking great. We're going to have a down open. From what I can tell, 525 is where this gap starts. I think that's your pivot point for today. Anything lower than 525 will probably fill this gap down to 517. And then your big line in the sand is 515. Why? Because that's where the $30 consolidation base is. It's got to hold 515. You go back below 515, it's just like those other examples. You're back in the consolidation range, and that's would be pretty bearish. Google, here's the daily chart. Well within the channel, riding the 8-day up. I would key off at 2450, which is the bottom of the channel and at horizontal support. I'd want to see that hold. I would get concerned on a break below that, below this nice rising channel that we've got here. And then that would put price below the 8 and 20 day and leave the next layer of support here at the 50. So I think holding this daily channel will be really, really important. And I would key off at 2450 as a place of importance. And, depending on how things go, that's your objective long. Your objective long is at the bottom of the channel, and it's been working for, since last October. If you look all back down here, buy here, buy here, buy here, buy here, buy here. It's been working, so you got to keep doing what's working until it doesn't work. So 24.50 is your spot. Semiconductors, really disappointing. I thought this breakout looked good. We had a $10 consolidation. We're on the 1 hour time frame. We broke out, consolidated up here, and then it failed to come back and back test. We've got a bunch of gaps down here that need to be filled. So breaks below 256 would target 254. I looked in the pre-market. We're down here at 252. Got other big gaps there that need to be filled. But here's the real problem. I've been harping about this $35 consolidation range, and we had broken out and we're consolidating above that level, but now we're down below. And let's just say we're down here at 250, back at the 50. I mean, that puts us back in this range, and the technical target is back here at 225. So as it stands this morning, down here at 250, unless we can recover this 256, 258 area, it's a failed breakout. There's no other way to put it. So, and that just rolls on through to AMD. That was really disappointing. Had a bad day yesterday, and it's going to have a bad day today. So that's not going to look so hot. KRE, we talked about yesterday. It's going to open below this 64 level. I think it's open down to 60 and then 56. Falling yields, that's going to hit banks. So I'm bearish on KRE. One bit of bright news. I don't know how many of you are still with me on BTU, but it was up 24% yesterday. Broke out above the prior high here at 950. So that may be something you want to look at. I'm not saying buy it today. I'm saying watch it because it came back to life. I never exited my position. So, I'm just going to hold it here and see what might develop here with BTU. Let me just show you the weekly. Here's the weekly chart. And from the very beginning, when we got this breakout here, we had been targeting $11 all along because that's where the void was. Now, if it can break above 11, then you got a whole new range of possibilities, because you can see on a relative basis almost no trading up here. So a breakout above 1150 is going to be huge on the weekly chart. So even if you're not in it, don't give up. Keep an eye on it and look for the next opportunity. Avis, we talked about yesterday, is creeping below this 75. It's a bearish setup. I think on a definitive break below, which you should get today, I think the target is 65. Now, just some closing thoughts today. Don't panic. Okay, just go level to level. Respect your stops. You've made a lot of money, or at least you should have, over the last few weeks. We've been doing really well, not only in our active trading, but positions like CrowdStrike and Costco and Pins and PayPal, and the list goes on. So those have all been nice trades. On the ones that haven't worked, we've taken our losses, like CVS, stopped out quick. That's what it's all about. So if we're in a down cycle now, respect the levels. Before you go bearish, you got to get neutral, right? So if you're in long positions and you get stopped out, take the pain, reset, watch your levels, and if certain levels break, we can get bearish and get short. So I hope that helps you this morning. If you're new here, I hope the levels have helped. Hit the subscribe button and the alarm bell. You'll get all my analysis. And please go over in the show notes and you'll find some links to register for all my content. And that way you'll get a lot of midday notes and ideas, observations that I have. Sent out 2 or 3, maybe 4 yesterday on things that I was seeing. So that'll be helpful to you. You'll find all my content right in your email box rather than searching all over social media. And longtime listeners, I appreciate your help. Hit the like button, pass the link along. You'll feel better about helping me out, and I'll appreciate it very much. So do your best to help me grow the channel. That's only makes it better for you as we grow our community. So let's leave it at that. Good luck this morning. I'll keep you posted. This has been Chris Buss with Traders Profit Compass. Talk to you next.